With all the new technology and the abundance of information on the web, you would think that buying or selling or understanding the real estate market would be easier than ever. But ask yourself one question. Now that you've done your homework and you think you know what's going on, what do you do next? Good morning, everyone. It is 10 o'clock on Tuesday, and as you know, at 10 o'clock on Tuesday every week, we have our weekly blog with Fournier Fournier, where we discuss exactly what to do next. We've said this many, many times before. There's so much information on the web about what you should and shouldn't do. And so what we like to do is take about 10 or 15 minutes. I used to say 5, but apparently I'm a little long-winded. But we're very thorough. We take 5 to 15 minutes, 10 to 15 minutes, let me make sure I get that right, to talk about different strategies, to talk about maybe some of the myths or misconceptions that you have about the real estate market, and tear them apart. And we do that, again, I said, in portions. This is our 9th broadcast, and we're going to continue to do this as long as we need to educate you about what some of your options are that you may not know about and make your transaction go a little easier, and or your search for a home and or your anticipation for selling a home a little easier. And today we're going to talk about loans. We're not going to talk about specifics about loans, but what I'd like to do today is give you some strategies on how best to prepare to buy a home with the right loan for you. And this is going to be a very generalized a broadcast about loans, but it's the most important, if not one of the most important aspects of a transaction. So we're going to tear that down a little bit for you. And what we did right now is we just put on the broadcast a copy of our new app. It's the Fournier app, and it allows you to take a picture of any house in America, literally any house in America, and actually get the value of that house, which I'll talk about the app in just a little bit, maybe at the end of the broadcast. But it's a real terrific app, so please consider downloading that app. But we're going to get into loans a little bit here, and it's going to take, like I said, probably 15 minutes or so. So I do want to move along. My name is Stewart Fournier. My wife and I, Randi, we practice real estate here in the Los Angeles area. We have represented from Mulholland, actually from the Valley, all the way down to Surfside near Orange County. And almost everything in between. We focus mainly in the South Bay, the beach areas. We live in Manhattan Beach, and so these are the areas that we're doing most of our work. But we do have well over 35 years worth of experience between the two of us in all aspects of real estate. We've done income real estate, we've done 1031 exchanges, we've done new bills, we've developed, we've done short sales, we've done regular residential, a little commercial. So we've done a lot of work. We have a lot of experience to offer you today, and that's what we're going to hopefully impart to you, some great information about loans. Again, this is Facebook Live, so please, I encourage any of you to ask a question along the way. I have a program here that we use that doesn't allow me to actually see if you're out there like Facebook, like your typical Facebook Live does. However, if you ask a question, it will come up on my screen, and I'm happy to answer it. I do encourage you to ask a question. As a matter of fact, I'm going to put that offer up for today, and hopefully we can get you a coffee bean card. So please feel free to ask a question anywhere along the line, and it doesn't have to be related just to today's subject. You can ask a question about anything related to real estate. Okay, so let's get started and talk about loans. One of the things I tell my clients right off is that although I have a lot of experience based on the amount of years that I've been involved in the business about loans and how they work, I am not the expert on the loan front. And I say that because many times you can run into realtors that do both loans and realty at the same time, and I always question whether that's the healthiest way to do things, because shopping for loans, and if you're a loan officer and you're in that business, it's an 8-hour day. It's as complicated, it's as research based, it's as important to be engrossed in one industry to be the best at what you're doing. And we certainly, again, as I said, are not experts at loans. So whenever I take on a new client, what I explain to them is, number one, I can guide you towards the best loan officer for you based on some of the things you might tell me about your job situation or your income, but I'm not the expert. As a matter of fact, I tell my clients very often, I'm not concerned and I don't really want to get into your finances. I don't really want to see the specifics about what your income is and things like that. I'll give an overall view, and then I'll give it to a loan company, and then that loan company will come back to me and say if it's healthy for you to be in a certain price range, if it's feasible for you to make a certain offer, those kinds of things. But we are not the experts in general about loans. So you do want somebody that works with you individually. And I'm going to get into just how important that is in a minute or two. Okay? So I hate when I say okay. Anyway, the first thing I want to do is clarify what a pre-qual... First of all, I'm sorry. One thing before I get started. It is absolutely necessary, 100% necessary, that you have your loan application in at least, or at least some feel for the loan company you're going to use or the loan product you're going to use prior to making an offer. I've said that many, many times on some of the previous broadcasts, so I won't get into that in detail, but it's absolutely necessary if you want to move forward. People will not look at your offer unless there's a loan connected to it, and of course, either you have other than the fact that you could make a cash offer as well. But outside of that, those are the parameters that people will even consider looking at your offer. So you really have to have that done prior to making an offer, because you need to give your loan information, the loan company that you're potentially going to use. You're not obligated, but at least you're potentially going to use, that you've communicated with, that you've basically done your homework and you think you want to move forward. So that has to be with your offer, absolutely, positively. So let me talk about what kind of a loan application you should actually forward to the seller if you're going to make an offer. And there's two choices. You have what's called a pre-qual, or you have an approval. So what is the difference between a pre-qual and approval? And this is very, very important, because your listing agent or the seller's agent, the one that's going to be presenting to the seller your offer, will know the difference between a pre-qual and a pre-approval. And based on the description I'm about to give you, you'll understand why that's important. So a pre-qual basically says, I've gone to a loan company, I've given them my credit application, and I may have verified, and I say may because it's not always the case where everything's been done with a pre-qual, and we're very careful about that. I have or may have given them some information about where I work and a couple of pay stubs. So a pre-qual is just sort of indication that you are breathing and alive, that you probably have a job, or that you're self-employed. That's perfectly acceptable as well. Or that you have enough money to put down where you don't necessarily have to prove employment, and you have a credit report that shows your past history in your finances. And that's all that is. So when a listing agent or a realtor gets that pre-approval, they know just a little bit about you, but not enough to make things move forward in a meaningful way. So that's why a pre-approval is a much more attractive way to present yourself when you're making an offer. And the reason that pre-approval is much better is that a pre-approval means that not only have you done the steps in terms of the credit and showing that you have a job, or what other options you have in terms of financing, but that your finances have actually been, for lack of a better word, scrubbed. In other words, you've taken the time to actually fill out an application, which is extremely involved and takes a great deal of time to prove to the loan company that if in fact your offer is accepted, there should be no problem during the transaction for you to be able to get a loan, to get an approval during the transaction. One thing I wanted to make a little bit of a correction about, people have a misconception of, is when you get a pre-approval, it does not necessarily mean that you definitely have a loan and they're going to give you the loan. A pre-approval simply means that you've gone through all this process and all the information that the loan company feels comfortable in giving a loan to you, and has given you an okay if once you choose a house, all the pieces come together. But unless you've chosen a house, you can't have all the pieces come together, obviously. So that's why a pre-approval, on the one hand, can be misunderstood, but on the other hand, is the best way to go in terms of being prepared and moving forward. So try to get that pre-approval, and your loan company will, of course, give you all the specifics for that. You will have a much, much stronger competitive situation if you have the pre-approval as opposed to the pre-qual. In some cases, I know of listing agents that don't even accept a pre-qual. So try to get that pre-approval if you can. Okay? There's that okay again. Anyway, let's get into it specifically. And I'm going to get myself maybe in a little trouble here, because what I'm going to speak to today, again, I emphasize I'm not a loan professional, but what I'm going to speak to today has been my experience as a realtor when it comes to what I've seen clients go through, respective of how loans work, and some of the pitfalls. Actually, I'm going to give you some tips today. Pitfalls in choosing the right company and choosing the right product to move forward. And one of the things I want to say is it's okay to look on the internet in terms of figuring out what your potential rate's going to be. That's perfectly fine to shop for, but to look for. But I have a rule that says you can look on the internet, but don't shop on the internet. So what do I mean by that? Well, what I mean by that is checking the rates, looking at one company as opposed to the other is obviously a very smart thing to do, but do not shop. Do not, and we talked about this before when it comes to professional services, when it comes to services on your house. Try not to shop. Try not to put just blanket applications in, or your email address or anything online for loans. Number one, you're going to get a barrage. You're going to get on a database, and you're going to get a horde of phone calls, just that most of us are just tired of nowadays, and they're not going to let you alone. And the people that are calling you are not the people that you'll probably be dealing with when it comes to your transaction. The people that you're going to be dealing with are the frontline salespeople that maybe won't even be involved in your loan at all, and they're going to give you all kinds of teaser rates and make all kinds of promises. I've seen more heartache, and I've seen more a sense of a waste of time when you simply go with an online company that sends you a representative and makes a lot of promises that will never happen. So again, my suggestion is you can certainly look online, but don't shop online. I'm going to say it. I'm going to get myself in a little trouble. Quicken, LendingTree, Rocket Mortgage, they're famous for giving teaser rates, and you know what I mean by teaser rates, and then actually not coming through at the 11th hour. And that's our biggest concern with internet companies. I will tell you, as a listing agent, and I know many, many other listing agents, when we hear that you get loans from internet companies like this, that on TV make it look like all you have to do is push in a couple of numbers on your phone and then you get a loan, it's probably one of the most misleading concepts today that we've experienced. It's very frustrating. And you know what? The frustrating part is loan companies get frustrated with that kind of advertising, making it seem that simple. Yes, they are simple in terms of the initial contact, and maybe they're giving you some information, but in terms of the actual mechanics and the actual acceptance and your actual loan going through with no problems, it is a very involved process. Sometimes the process is even longer than all the aspects of the actual real estate transaction during the escrow period. So I cannot emphasize enough to consider using a much better method, and that is by using loan brokers. Now, loan brokers are individuals that are going out and seeking business on their own, wherein they have different products. In other words, they represent a multitude of companies and they look for something specifically for you. If you go to a specific loan company, they're not shopping for you. They're selling you their product. If you go to a loan broker, they are shopping different loan companies for you. And that's a huge difference. And it's a difference also in the relationship that you have with a loan officer. If that loan officer is going out and looking for different loans for you from different companies, doesn't it stand to reason that that loan officer is going to stay with you from the beginning to the end, be your point of contact? When you use an internet loan company, you are talking to a representative or representatives as the time goes by, and they deal based on volume. They're not as concerned about the individual loan applicant as a loan broker would be. Now, I'm going to get myself in a little trouble by saying that because I have used loan brokers, I have used internet companies. When I say have used and have experience with them, because that's what the client chooses, and you have to go with what the client wants, and have had some success. But in general, what we find is it's a much bigger struggle to use the internet companies, to use these companies that give teaser rates all the time, and they simply don't come through. And when I'm talking about not coming through, I'm talking about the 11th hour. I'm talking about 30 days after you've been into escrow and you're about to close. And all of a sudden, and many of you know this is true, the loan is not quite what you thought it was, and it turns out to be maybe 0.25% more than you thought it was. The terms are a little different. All of a sudden, you're caught because you've, obligated yourself to buy a home, and your deposit's at risk, and all of a sudden the loan company changes their tune, which, by the way, they have the right to do. It's always in the fine print. So you're never, ever really protected until the very end when they actually give you the loan. And again, I'm probably getting myself in a little trouble with my loan friends out there, but this has been my experience over the years, so I'm only imparting what we're very concerned about as realtors as the transaction happens. Now, one of the things that you can do actually that helps a great deal in a transaction is to be as transparent as possible about your situations, respective of your loans, so realtors can help you in that process. Many, many times we've been able to negotiate any problems right into the escrow, change a few things, and make sure that you get your loan and there's no problems. That's why it's doubly important to have a loan representative, a point person that returns your calls. One quick tip: if you use an internet company or any other loan company, when you initially called, in other words, when you're contacting them for the first time, and they don't get back to you within a matter of hours, or at most the next day, you've got a company that's not dedicated to you. That is a first impression with a loan company is so, so important, and they know that. So if you're not getting your phone calls returned immediately in the initial process, that's a big indicator that you're not going to get a lot of help at the end when you really need it. So just a metric there. Now, how about banks? How about you using your local bank? This has been our experience with local banks. The bigger the bank, the more people that are involved, the more bureaucratic it is, and the less concerned that they become with making sure that your loan comes through. Those are harsh words, but that's been my experience. In other words, if you have a Wells Fargo or a Bank of America or a Citibank, these are wonderful institutions. However, they have their set of priorities that are much different than, say, a smaller bank. We tend to like smaller banks because smaller banks have less people, have regional managers and super vice presidents and people that you need to go to. Are the bureaucracy climb is just a lot different, and so the local banks tend to be a lot more customer service orientated, and we tend to like them a lot more. That's not to say Wells Fargo, Bank of America, and Citigroup and Citibank. Now that I've mentioned it, and I put my new sum myself, I haven't done a good job in the past. But what we have found is that there are many times when, strictly as a result of being the large institutions that they are, they can tend to be difficult to work with if there is a real problem at the end. And they're not as concerned because, frankly, you're just another applicant out of the millions that they have. And so that's why we actually like smaller banks a little bit more than larger banks. So again, as I said, your best option, in our opinion, is an independent broker, someone who you have a point of contact with, someone who's working with you, someone who's calling you when they see a problem, rather than having the problem happen and you have to call them. You know what I'm talking about. You'll know when you have the right loan officer when they're coming to you and trying to work something out, or trying to work out a misconception or something on your application that doesn't add up, or a situation like that. The bigger institutions tend to wait for you to find the problem, and then you have to go chasing their policy. So that's my advice with respect to that. Okay, a couple other things. Again, if you have any questions, please feel to ask at this time. I can see them right on your screen. I'm going to take this off for now. Not that it still doesn't apply, but I just can't have that on the whole time. It looks a little ridiculous. Okay. This is extremely, extremely important. Because of the new laws and regulations related to the banking industry, it is super important that you, while you're in your escrow period, complete your paperwork as soon as possible. And the reason for that is banks are under a tremendous amount of regulation now to do things in a manner that are designed to help the consumer, and they do in fact do that. However, they do need a little bit more cooperation than they used to from applicants. In other words, they have to have somewhat of a commitment from an applicant a little sooner nowadays than they used to before when you're actually in escrow. Otherwise, you extend your escrow period, and that's always risky for everyone concerned. So not doing your paperwork and not getting it in when the bank asks for it can actually turn out to be a real headache for you in terms of meeting your deadlines in order to close escrow. If your paperwork's not done, things actually stop. They put you in another pile and they wait for you to get to it. And you don't want to do that because obviously in your contract that you have with the seller, you've promised to do things at a certain time, and you'll miss those deadlines. So it's extremely, extremely important to be as proactive as you can. In fact, it's probably best for you in some cases to call your loan rep every now and then and say, are we okay? Are we moving forward? And therefore you won't have any problems meeting deadlines or putting your deposit at risk on the home itself. So a very, very important thing to do nowadays. Please do not leave it to the last minute. It will cause problems for you. You could potentially lose the house in terms of going through with the deal. With that said, I'm going to end today. I hope I've given you some tips. I know I've said some controversial things here, but this, again, has been our experience. This is what we've seen over the years, some of the heartache that we've experienced. In general, you will find it a little overwhelming for all the paperwork that the loan companies will ask for you. Just Ben and Guerrero. I can't remember the phrase. I'm screwing that one up. Frustrating. Barrett, what's the expression? I can't. Facebook Live, what are you going to do? What? I'm sorry? And Randy said, just tell everybody have a good day and get off the air. Ben and Grid. Okay, I can't remember the phrase. I'm going to let it go. Okay. Do your best to get the work done, to get your paperwork done. I'll just leave it at that. Okay. I was going to say, if you're confused at any time about which is the best loan company to choose, or which loan company you feel is giving you the correct information, please feel free to call us as well. We have a sense. We can do it just based on your situation alone of where you might be. I will tell you one last thing before we go off the air. Loan companies do not vary that much on their rates. Again, be careful of teaser rates. The most we've really seen companies compete with one another is a 1/4 point to 1/2 point. Past that, it gets a little ridiculous. You do want to be aware that if most people are getting a 5% loan and all of a sudden you hear somebody getting a 3.5% loan, chances are there's not that big a spread. Chances are that it's an entirely different loan. So be cognizant of the fact that teaser rates and rates do have a lot of implication for different types of loan, different types of products, and you want to be specific about that. If you're searching just strictly based on a rate, you're not going to get the full picture. We've had many circumstances where someone's gone to another loan company because there was a 1/4% difference, and then come to find out that it's not the same product, it's not the same loan, and all of a sudden they're stuck with it at the end, and it gets to be a problem. So very important point that the loan company should make sure that you're aware of, and we can help you as well. So with that in mind, again, no question, can't give that coffee bean card away. I don't know why, but please know that every Tuesday at 10 o'clock we talk about many aspects of real estate, and I want to encourage you to give me some ideas as well about what you're thinking about. I've got plenty of them. I can do this for another 50 weeks and come up with different things to talk about, but I'd rather get involved in what some of your concerns are nowadays. You know, sometimes as realtors we're too close to the forest to see the trees. So let me know what some of your concerns are, and I'd be happy to tear it apart and ask for it. Again, if you're thinking of selling in the next year or even the next 2 years or whatever you're planning to buy or sell period is, we're happy to work with you. We're happy to answer any questions you may have about the process. And again, we've worked a very large area, most of Los Angeles, from the basin, in the beach areas, and of course here locally in Manhattan Beach, Hermosa Beach, and Redondo Beach. So check us out. Give us a call. Let us know if we can help you in any way. Again, we'll see you next time. We'll see you at 10 o'clock on Tuesday. We do this weekly. See you, everybody. Bye-bye.